Thank you for tuning into the All Funds Investment Podcast. This episode features Ali Jamal. Ali Jamal is the founding partner of First Check Ventures, which makes early and transformational investments in companies throughout Latin America. He was previously a product and growth executive at PayClip, Rappi, and Agoda. In this episode, we dive into venture capital investing with a focus on Latin America, and Ali talks to us about the opportunities that he sees in the region. If you're interested in joining us in the show, drop us an email, info@allfunds.io. You can fill out our form below. We're currently filling out the calendar for 2024. This conversation is for educational purposes only. We hope you enjoy it. Please make sure to like and subscribe to continue learning from leaders in the alternative investments industry. Lastly, you can check out the links in the description to connect with us and First Check Ventures. I'd love to kick it off just to learn about your story. You have one of the more interesting stories we've heard, so give us your background and take us to where you are today.
Sure. Well, I'm originally from the U.S. I grew up in the Midwest in Minnesota. Did my undergrad and my master's at Stanford. Then did kind of 3 years of investment banking on the East Coast. Moved back to Silicon Valley, started working as a data scientist. And then about 10 years ago, made the jump into product and growth for startups. Um, and then after kind of 5 years of working in the Valley, got an opportunity to go work abroad. Ended up moving to Bangkok, Thailand to join Agoda, which is the large travel company. Ended up leading their mobile growth and kind of special projects, new initiatives. One of those being China. So I ended up spending a lot of my time in China, basically operating as Agoda's head of marketing CMO for all of China. Um, and then saw the rise of the super apps in Asia. I was really excited by the ability to transform um, economies through these super apps, and I wanted to be part of the next one. So I ended up being in South America on vacation, discovered an app called Rappi, ended up reaching out to the founders and moved to Bogota, Colombia to join them and um, become their head of performance marketing. Um, Rappi is Latin America's largest super app, and was really excited by that opportunity. And then ended up getting recruited out of there to join PayClip in Mexico City. PayClip is Mexico's largest fintech and first fintech unicorn. I'd been an angel investor on the side for quite a while, and then during the pandemic, kind of just doubled down on that. Started doing more angel investing, doing more mentorship with the different programs and accelerators, and kind of being in Latin America, I was getting a lot of interesting deal flow from there. And kind of throughout this period of, especially I think the early stages of the pandemic, you're also kind of reconnecting with people and touching base. And I think we were all a little bit more open to having these kinds of conversations. And I ended up reconnecting with a lot of people who I'd went to school with or had worked with in the past, kind of catching them up on this last 5-6 years and the journey I'd gone through from San Francisco to Asia to Colombia and then Mexico and you know startup life and investing and a lot of people were getting really excited by these companies I was investing in and um, actually also wanted to invest but didn't really have access. And so I created an angel syndicate on AngelList in the summer of 2020 to uh, give people that access. So I started finding deals that I wanted to put my own money into and then sharing it with this broader group. And that ended up doing really well, and so I ended up kind of leaving my job to focus on investing full time. And so now I'm in doing that. So I invest in early stage companies, a big focus on emerging economies, but willing to invest everywhere, kind of look at everything. I'm just trying to find the right people to back and support in the early stages.
That's very cool. Your journey sounds really interesting. Just how you kind of went from the Midwest, which is where I'm from, and Mike is from as well, to kind of a seeker of opportunity through different places around the globe, right? Which is pretty fascinating. I'm just curious how those conversations came about. You just reached out and said, "Hey, I'm interested in what you're doing," because obviously there's a few different things that you did across when you started there, from a CMO at a marketing company, a couple app companies, and that took you a lot of different places. That's pretty cool.
Yeah. So I think it had always been something I'd wanted to do, wanted to spend more time abroad. And so the initial role kind of making the jump to Thailand was a go ahead reach out to me, and it was something that you're kind of questioning, like, okay, am I ready to make this jump, or what happens if you leave Silicon Valley? But then once I made the jump, I just realized how much easier it was than I thought it would be, and like the level of learning experience and opportunity and just growth, kind of personally, professionally, was really outstanding. And after that, I felt more comfortable reaching out to companies globally and trying to take on new challenges. So I ended up reaching out to the founders of Rappi directly because I'd already had the experience of living abroad.
Yeah, no, that's great. I saw you were in obviously you made it to LATAM, that focus. What was the learning curve? I'm just curious, going over there, initially starting out, and then obviously, where you're at today.
Yeah. There's definitely differences between every market, but I think the thing that ended up surprising me is just how similar a lot of the things are, right? And so most of the challenges that you kind of face from a professional standpoint are more because of industry or because of stage of company, or those sorts of challenges, versus anything specific about working in these different places. I think sometimes the interpersonal relationships between employees, and you know I was managing teams, and so I think sometimes there was probably some nuances or some cultural things where like there is this kind of idea of being the you know overly direct kind of American, and maybe not always following all the cultural niceties. But I also think
Sure.
just in general in startups, you're also supposed to kind of be blunt and direct and to the point. And so I think though those cultural differences have actually probably um, kind of become, I think, part of my reputation as well now, especially like in the startup world, and when I'm investing with people and they know that I'm not going to like sugarcoat things. And if I don't like something, I'm going to tell that to their face. And, I think people respect that, right? Like, I think I know that you're supposed to have these, you know, cultural things and be polite, but I just feel like you end up wasting so much time sometimes just trying to be polite instead of just being direct. And I think the nicest and kindest thing I can do is be direct, right? And if I think you're doing something that's taking you down the wrong path, just telling you directly. If I don't like what you're building, just telling you directly, right? It saves both of us time. I think oftentimes we mistake the pretend nicety for their actual nicety. The actual nice thing is being direct, being honest, giving that feedback if it can be helpful.
Yeah, I love that. I'm a big fan of Shark Tank. That's one of Kevin O'Leary's big things. Tell him this isn't going to work. Maybe spend your time on something a little bit more useful.
I just think when you do that, right, it just ends up also earning their respect as well. Like they end up hearing so many people give them the same BS back and forth, and so much of venture, I think, in particular, right, is this industry kind of based on never saying no, and always just kind of saying maybe and come back to me in 2 months or 3 months or whatever, and just kicking the can down. But if you can, explain why it's a no, and what they can do to change it, I think it makes life just much better and smoother for everybody involved.
Yeah,
Yeah, for sure.
absolutely. One thing I'm curious to talk about with you before we jump into some of your investments is talk to us about these super apps. It's something that I hear about. Obviously, it sounds like they're a lot more prevalent in other regions, Asia in particular. But talk to us about super apps and what attracted you to those.
Yeah. So the closest thing we probably have in the U.S. is Uber, where Uber is ride hailing. It's also eat. They have Uber Eats, so they also have kind of grocery delivery type stuff as well. In a lot of these more emerging economies, you end up having a lot of the deliveries by motorcycle, and so anything that a motorcycle driver can kind of do, you have one app that you can kind of just go and kind of call them to do it. So that could be hopping in and getting a ride someplace. It could be picking up a package. It could be food delivery. It could be grocery delivery. Um, and I think the nice thing is that uh, you have this one product that you kind of trust, where everything kind of ends up becoming vetted. And so from a when you think about it from a kind of growth perspective or a product perspective, uh, when I'm working at other companies like, gaming and blah, 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 every time you want them to use your product, you have to go and get somebody to install it. And then you got to convince them when they want to pay, you have to go and figure out how to get their credit card information and how to do that process. And with something like a super app, they use you once and then you have all that information, and so that it's just a much stickier product, and there's not that hassle of having to go and reinstall something new, go through a sign up process, give them your credit card, who knows if you could trust it. So if you have this trusted source that is already doing two or three things for you, it's much easier than have them go and do the fourth, fifth, sixth thing. Um, and I think especially when we kind of look back 5, 6, 7 years ago, I think one of the other things to kind of think about is uh, app size and the space on your phones, right? And so I think especially in emerging markets where maybe they're on a generation uh, or a couple generations behind in terms of smartphones, right? Especially lower middle class or middle class people, they don't necessarily want to go and install a separate app for every single product line. And so if you can have one app that fits on your phone that can, handle your ride hailing, handle your food delivery, handle your grocery delivery, handle your pharmacy delivery, all these things at once. It just makes everybody's life much easier, and then you don't have to waste, space on your phone that you want to use it for your other things.
Yeah, that makes a lot of sense. That's very interesting. Um, yeah, I guess so. Kind of digging in a little bit to obviously your Latin America. You've arrived. You're looking at different opportunities there. What's the state of LATAM today? Maybe just started with that. Can I just give us an update?
Yeah. So I think it's hard to talk about LATAM today just because there's so many different countries and so many different, kind of political situations, economic situations. And so it really kind of depends country by country. Um, but I would say overall, right? Like when we're looking at LATAM, um, you know, Latin America has the same GDP per capita as China, right? So when
Mhm.
people tend to think about LATAM as being super far behind, and then China as the future, I think in reality, right? Like if you have the same GDP per capita, the same money's flowing through, a lot of Latin America looks very much like the US. Like, of course, you have some rural areas that maybe don't have the same access as things in the US, but we're also talking about the most urbanized region in the world, right? Which is again why something like super apps ends up becoming a very big part of Latin American culture because people are living in cities and they need things that you get in cities that are harder to get when you're, compared to being in the suburbs. So, delivery services and ride services and all these sorts of things. You know, we are starting to see the shift, right, from kind of traditional businesses to more tech businesses. Um, we have seen the number of unicorns grow from 5 or 6 in 2018, 2019, to now there's more than 50. Right, so tech itself is exploding. We're seeing the number of new VC firms is growing. I think there's a lot of changes that are happening, but there's still a lot of ways that there's a lot of services that just haven't um, existed yet and need to exist. And so I think there's this need to continue to build, continue to grow, and continue to service everyday people. And so especially when you think the middle class has doubled over the last 20 years, um, you know, these people are still not necessarily getting access to things that we think the middle class or that we take for granted the middle class has in the US. And I think there's been a lot of kind of legacy businesses, legacy traditions, and I think especially in things like banking and anything related to finance, right, tends to be uh, a bit further behind, um, and just a lot more paperwork, a lot more restrictions. It's hard to track people. There's not necessarily credit scores and these other things that we just kind of take for granted. So um, I think that there's a huge room to just kind of help leverage money and help create a higher velocity of money around the region.
Yeah, that makes a lot of sense. Money in particular. What would be the reason that maybe these U.S. firms are going into Latin America?
It really depends on the company, right? I think some of them, they're still fighting and growing in their U.S. And so there's still such a huge opportunity in the U.S. that why go and spend money and resources in these other countries. Some of it is probably government and government regulation. You have different sorts of banking rules and transfer rules in different countries and different regions. Um, I think part of it is also just, you end up having people on the ground that create similar businesses faster and better and know that the customers better. And then so I think it's some combination of those things, right? Like there's you actually to see the opportunity in LATAM and want to build that and go after that. And it's I think when you're starting from zero and you're going to build something, it makes sense to go and build $1 billion business in LATAM. But if you already have a $50 billion business in the US, it might not make sense to take the resources and the energy to go and try to add something else there.
Yeah, I mean that makes a lot of sense. Yeah, or just maybe size of opportunities depending upon what you're dealing with already. In your current
Yeah.
firm, as you mentioned there. That's interesting. Is there anything that's exciting that you're seeing being built as far as infrastructure or unique opportunities that are focused more in the LATAM or emerging market area in general that you would see that maybe people have kind of overlooked or they're not paying attention to right now?
So I think we often talk about how places can leapfrog, right? And I think there's kind of this class example of Africa where uh, they might not have built up the telephone lines, but then everybody got mobile phones, and so they were able to kind of skip landlines and go straight to mobile. I think
Right.
that there are probably some opportunities where we might see leapfrogging in Latin America, and because we have kind of these very old school legacy businesses and industries, and they maybe haven't caught up all the way to where the US or Europe is in certain aspects, they might actually be more willing to adopt things, right? And so we see, I think, places, especially places that have had kind of uh, financial issues, right, are I think more willing to adopt, crypto or stable coins. They're more, it becomes a bigger issue for them. And so I see we can see that talking in kind of Web3 and the Web3 environment, but I also think it can just kind of play out in a lot of new technologies, right? If there's no kind of legacy infrastructure that you really have to be beholden to, as you are now building a new bank, a new mortgage company, a new whatever, you can kind of maybe skip the processes that the US did that were inefficient and go to the faster, more efficient ones, whatever those may be.
Really cool to think about. What type of tell us about what you're seeing out there. What type of companies are you investing in? What type of companies are you looking for?
Yeah. So I think the thing for me is uh, there's again this kind of huge portion of the population I feel like that is being ignored, and so I try to find companies that are going after that, right? And one of the things that I just kind of addressed is, your TAM question right away, right? If you have this large population that's being ignored, and you can go and serve their needs, you can make money. And so a lot of the things that I try to put my money into are things that I feel like everyday people would use or should use, right? So I try not to do things for the 1% or the 0.1%. Instead, I try to focus on that 60% that's in the middle. Um, and what are the ways that we can make that 60% in the middle's life easier, right? So I think over the last few years, we've seen, more and more people be able to open a bank account, and it was probably 10, 15 years ago that 90% of people didn't have a bank account. Now it's probably less than 50% of people don't have a bank account. But even though they have a bank account, we're still seeing 90% of the people not having access to the right credit or debt that they need, right? Credit cards are still pretty rare in a lot of places. Credit scores still don't really exist in a lot of places. And as we're getting into this society that's becoming more and more mobile, more and more international. Um, I think 50 years ago, right, it was rarer for somebody from Colombia probably to move to Brazil or to move to Argentina or move to Mexico City. But now I think it's actually pretty common. Um, and so finding solutions that can work for all these sorts of people, uh, regardless, and not just the kind of historical legacy population, but this kind of newer way that the younger population is living, working, and thinking about their lives.
Yeah, very interesting. When it comes to like sourcing deals or finding opportunity, I mean, obviously there's, you mentioned a few things, maybe cultural differences in certain aspects. Uh, how legacy infrastructure is there. I mean, the time to source a deal to get an investment, is that longer, more nuanced? I'm just curious. I'm sure there's a lot of different factors there, but I'm just curious kind of what your experience has been to this point.
Um, I know. I mean, part of it might also be my experience, right? Which is maybe kind of very specific, but um, I find that a lot of these things are just very similar between all these different places, all these different regions. Um, when you find somebody who's building something that is a good idea that needs to exist, it's easy to get them funding. It's easy to find other people who want to invest in them and support them. I think,
Hmm.
uh, you know, part of it is the cost of labor is cheaper in Latin America, and so I think they're able to get further along in their MVP or further along in their development without funding and just being bootstrapped. Um, and so, one of the things that I see, and it might partially be, the fact that costs are lower. It might also partially just be the fact that it hasn't really existed as much. But in the U.S., even people that are kind of pre-launch, pre-product, will go out and try to raise money beforehand, right? Or they'll raise 1 million or 2 million, especially in the last few years, right? Sometimes even 5 or 10 million before they even have any sort of customers, any sort of customer feedback, any sort of real data. Um, Whereas in Latin America, because it is, I think, easier to build out some of these things and get things in front of people, the definition of a pre-seed, I think, is kind of shifted. So, I think most of the companies I see that are pre-seed in Latin America are post-launch, are post-revenue, do have customers, and it makes it much easier. Like in my mind, it's a much better investment, right? If something actually has revenue and customers versus something that doesn't. Um,
Right.
and I think part of that is also uh, because so many of the services haven't been fully built out yet, right? I think there's easier to kind of make a case. Okay, this thing exists in the U.S. This thing exists in Europe. This thing exists in China. It doesn't exist yet in Brazil. Why not? Right? And I'm going to go and build that. And so I think it's easier to find those holes and to go and make bets on those teams that are building to fill those gaps. Whereas, in the U.S. in Silicon Valley, you know, I think people tend to build things for the 1%, and really, like, there's life is pretty good, right? And so, there's not as many glaring holes that people need fixed, and so you find a lot of people going and trying to fix problems that don't really exist or that aren't really problems, and so I think I'm more excited about kind of Latin America for those reasons, right? Like I could come in and write smaller checks, my money goes further, the products are already kind of proven out, and the opportunity is still really huge.
Yeah.
That's
I,
awesome. That's
I think that's
cool.
really cool too, just being able to come in and like almost be able to see the future. Like, yeah, I've seen that, here in America where, your experience will go a lot further. On that note, talk to us a little bit about what type of value do you guys add to these companies? Are you working with them like mentorship, different things like that, or beyond the capital, what type of value you guys adding?
Yeah. I think every investor says they add value, right? But I think the more you dig in, the more you really start to question how much value are these people really adding. Um, and so I really do try to be a value add investor, but I think part of the way I also add value is by getting out of their way. I think especially in the beginning, right? Like as you're kind of getting your initial funding and how you're positioning yourself kind of post launch or whatever, I think that there's a lot of value that can be added in those places, and you kind of come up with the roadmaps, come up with the strategies. You get your round done, and then you go and you execute on those strategies, right? And so I think with that execution part, typically like that should be the founders, right? Like your VC shouldn't be coming in and really executing for you or telling you how to execute. And so basically what I find is there's these specific points of time or in a company's life cycle where they do need that extra help, they do need that extra support, and you kind of set them on the path, and then they go and they execute for 6 months, 9 months, or a year, and then they come back, or hey, like we're having issues with this thing, and maybe you give them some advice and some mentorship, and then they go out and they're like, okay, yeah, now we've hit these metrics, we want to go out and raise our seed round, we want to go out and raise our Series A, how do we position ourselves? And then again, you kind of go and you talk and you work with them, and then they go and they get their money, and then they go and execute again. And so I feel like um, there's this you know specific points where you can add a lot of value, but a lot of it also just has to be in the founder. And if you kind of use those points to set up the right strategy, set up the right thought process, you don't really necessarily need to be in there every week and messing around with things.
Yeah, yeah, definitely. Definitely getting out of their way. I'm sure they appreciate that. Obviously, you're focused on how you can add value to them. And
Yeah.
I'm just curious too. As you're looking at the different opportunities in the space, is it pretty crowded? What's the competition look like? I mean, what's the size of your team as you try? As boots on the ground, you're trying to source these deals. I'm sure you built out a Rolodex of people be in the space, right, over time. I'm just curious, kind of how that is today.
Yeah. So, you know, I talk to a lot of companies and kind of consistently, having a presence across all the LATAM and try to, visit as many countries as I can each year. Um, and then also people just start to know you. You start to know who the different players are. I'm a mentor for some of the different accelerators. I've invested in different companies. And so then they also will introduce you to their other investors. Those other investors that come in later um, will also have other companies they want to introduce you to. And so it kind of just ends up being a lot of kind of deal sharing and there's some amount of boots on the ground, but a lot of it I think is just being open and trying to be helpful to people. And when you build up a reputation for being helpful, then more people find a way of trying to get that help.
Yeah, it sounds very collaborative, which is pretty amazing.
Yeah. Uh, I think in general, Latin America does tend to be a bit more collaborative. Um, I think with most of the deals getting done, most people aren't taking the full round themselves, and so I think there tends to be a lot more collaboration. And then I think especially because I am coming in as the first check in being a very early stage investor, and that's not really the thesis of most other funds. Um, a lot of funds will be like, "Hey, I saw this really early stage deal, thought the company was cool, but it's way too early for us." And then I can go and talk to them, and then I can invest, and then I'm also feeding them the updates of, okay, yeah, this company's out going out now to raise their seed. I invested, and I really like them. You should take a second look.
Yeah, that's interesting because, yeah, to your point, many don't want to be first. Nobody wants to be first a lot of times, right? So
Yeah.
you have a
Yeah.
unique perspective and insight coming in early, for sure. Yeah.
Yeah. And being there early, I got to imagine more of these companies fail, at the seed stage, at the earlier rounds. Talk to us about like what do you expect to see as a success rate for the companies that you work with, and where have you seen the most success in terms of that could be like a general question, like particular founders or types of companies you've invested in, or however you want to take that.
Yeah. So I think it's a little hard to come up with an exact failure rate or prediction of failure rate. I mean, ideally, right, you're hoping that you're a better investor than the average. And I think that we are living in a period where things have evolved so much over the last 5 years, and things have changed so much over the last 10 years and last 15 years. So I don't know if it really makes sense to go back and look at the companies from 2010 and see how many of them IPO'd and use that as your potential success rate, right? I'm picking different companies and different things are happening. I think so much of the Latin American ecosystem is still developing and is still changing so quickly, right? So pointed out, we have, 10 times more unicorns than we did a few years ago, right? Like these things are just changing so dramatically. And, I don't know if we're going to get another 10x unicorns in the next 5 years, but it's possible, right? And so, um, I think just to use historical numbers is a little bit a little bit hard. Um, I am coming in early. I do think X's number are going to fail, and you can't win everything, but the potential, right? If you're coming in, we now have unicorns, we have decacorns in Latin America. So if you're coming in at a sub $10 million valuation, which is an opportunity you have in the pre-seed in Latin America, then if it goes up to be a unicorn, if it goes up to be a multi-unicorn or a decacorn, you're talking about a pretty nice return.
Yeah. And what type of companies where are you seeing the most success in terms of is it founders that you're seeing the most success in, or types of businesses?
So I think the reason why I keep on saying questions are tricky, and I'm not trying to avoid it, but part of it is we're coming out of such a boom time of 2020 to 2021, where uh, I mean, it was easier, right? Like people were getting access to a lot more money, and it was a lot more popular for people to go and try to invest in Latin America. And so, I don't think that money is necessarily the best predictor. And these companies I'm investing in are still pretty early, right? So, we've been investing as a firm since 2020. Personally, I've been investing longer, but um, even over 10 or 15 years, a large number of companies are still private, right? And so, um, the founders that I think are going to do the best tend to be the ones that are, you know, the most thoughtful. They know that when they're raising money, it's, an obligation and a liability in some sense, and not just kind of this great thing to be bragging about, right? Like, I don't think we always kind of celebrate like, oh, this company raised 100 million, or this company raised 200 million. That to me isn't really the thing that we should be bragging about. We should be bragging this company, is profitable. This company made $5 million of profit last year, right? Like those are the things
Yeah.
that we should be thinking about, and um, those don't usually get headlines, right? Like nobody's putting out their EBITDA numbers into newspaper reels or whatever. Um, and so the founders that have been thoughtful about what they're doing, have been open to feedback, right? Are hardworking, and are building things that people really want. I think have had the most success so far, and have been able to find traction. But I think the other thing is that from the first check where I come in to the point where those checks are actually liquid at an IPO or an M&A, there are so many steps involved, and there's so many things that can go right or can go wrong. And I think it's also, a little bit hard to just play Monday morning quarterback and be like, oh yeah, this is definitely the thing that's going to work or not work, right? I think there were some great founders that something went wrong in their company, and they weren't able to continue building, or you know investors got scared, or whatever, and things that were out of their control. And there were probably some founders where they kind of got lucky in the beginning, and they ended up finding something that people really wanted, and um, then got acquired or something else. So I think it's hard to just to say like um, this is the one thing that you look for. It has to be this combination of things, and kind of people that are thoughtful, people that are trying to learn, people that are trying to improve, people that kind of understand the big picture and what we're really trying to accomplish here. I think is always things that excite me, at least.
Yeah, that makes a lot of sense. And maybe just a better question is, what patterns or trends that you see that are interesting going forward? Because to your point, yeah, obviously historically a lot of things are different now. Current state versus past state, now future state, right? Um, what interesting trends you're seeing in maybe outside of LATAM or other regions, or maybe it's Africa? You mentioned that earlier.
Yeah.
That that would be kind of interesting to talk about.
Yeah, so I think there's definitely a shift towards uh, numbers, right? And real money and cash flow and revenue. I think and I actually feel like a lot of these big VCs should be apologizing to the startup founders, right? Because they're the ones that in 2020 and 2021 were like, oh, don't think about cash, don't think about revenue, just think about how many users you have. And then some of
Yeah.
these people went out, then it got 1 million users, 2 million users, 3 million users, whatever it is. Come back to the VC in 2022, they're like, oh no, I don't care about users, I care about your cash flow. Like you can't hold it against a person when that was their goal, and you told them that was what they should do in order to get the next level, and they did that, and then it's not enough, right? So um, I think the goals have changed for people, and I, I think part of it is even in 2020, 2021, I think the people that knew the goals always were going to be revenue and knew the goals were always going to be profitability, and not chasing vanity metrics are the ones that have kind of continued to build good companies and continue to get funded. I think people that got sucked up and listened to their VCs too much and you know don't charge revenue yet and don't do these things ended up getting caught and or stumbling and might not be able to raise their next round. We're going to find out, right? Most of these companies raised big rounds in 2020 and 2021 have 24 to 36 months of runway, and we're now on kind of year eight or about 18 months in, probably 20 months in. And so we'll see over the next probably 6 months, 10 months, what's going to happen. Some of these companies are probably going to do down rounds. Some of them might get like aqua hired, and some of them might have to shut down.
Yeah, definitely. Obviously, kind of what you talked about earlier, how you kind of approach your thought process as far as in investing. I mean, telling them what they need to hear, not what they want to hear, is just important, right?
Yeah.
And coming back, moving the goalposts
Yeah.
again
Goalposts
because
are
you told
moving.
them 2 years ago that this is what the user base need to be, and now that's a different conversation. So I think to your point, it probably bodes well that you're a straight shooter, and you say, hey, this is what my expectation, or I don't like that, or I do, and here's some constructive criticism or feedback. I think that would be helpful for someone coming in to as they're looking to raise capital, right?
Yeah. And I think, again, revenue, your cash flow is an indication about whether you're actually solving people's problems, right? And so ultimately, as a founder, that should be your goal, right? Is you're trying to solve problems, you're building a solution that makes people's lives better. And so the way you should be able to measure that is through your revenue, through your profitability. How efficient are you at doing this? And so it shouldn't be how many likes do we have on our social media or how many followers we like. That's all fine, but the real, ultimate thing is, are you making money off of it? And, can you could use that money to continue to do good?
Yeah, absolutely. I totally agree with that.
What role does Latin America have in the future global economy?
I think that there's this huge opportunity, right? And part of it is, kind of where we are right now in, same GDP per capita as China, half the population. But I think part of it is also just geographically when we think about the future of the world, right? And we're looking at things both economically but also politically, right? We're seeing the US get drawn into multiple skirmishes, in the Middle East and in, Eastern Europe. We're seeing, more and more rivalry with Russia and with China. And when you think about Latin America and its proximity to the U.S., um, the large number of people that are there, the cost advantage for U.S. companies to go and hire and to build in Latin America, I think that there's this really great opportunity. And if the more we start thinking about the Americas as a whole instead of Latin America versus the U.S., I think the better off we'll be, right? Um, the more we could do in terms of increasing trade with these countries, the more we can do to secure these opportunities and help these countries stabilize. I think the better the future is for us long term, right? So we're already kind of seeing a lot of people near shoring and moving things out from Asia to Latin America. I think that trend is going to continue. Um, and I think the relationship between the U.S. and Latin America, I think, only can get stronger going forward.
Yeah, yeah, absolutely. That's great. As you think about as you kind of have these conversations with different opportunities that come your way, provide mentorship and insight and advice. As someone starting out that's looking to maybe take a company, a new opportunity, bring that to fruition, what type of advice would you give them? Obviously, we talked a lot of great things to this point, but any other insights that you would say, hey, if you're building in this region of the globe, I would consider maybe this or this framework on how to go forward.
Yeah. So I think a lot of founders are kind of given bad advice at the beginning. They're told, "Oh, keep your idea a secret. Go get some IP or file some patents and all this stuff." And you know, Facebook wasn't the first social. Wasn't the first social media. Google wasn't the first search engine. Airbnb wasn't the first. Like Uber wasn't the first. Like all these people were third, fourth, fifth. It wasn't the fact that you know they kept it secret and then all of a sudden like they were able to do it, right? It was the fact that they built the best technology. And I think the way you build the best technology is by making sure you're building something that people really want. And so I would say at the beginning, go out and talk to so many people, like as many people as you can, who you think might be your target customer. Understand what their real problems are. Figure out if what you're building is actually solving those problems, right? You don't want to spend all this time and energy and resources to build something that people don't want. And that's ultimately what, you know, failure is going to look like, right? So instead of worrying about getting a patent or worrying about, somebody going to steal my idea, if somebody can steal your idea and build it better than you, why would anybody back you to begin with, right? Like your idea is going to get public at some point. If all it takes is somebody at Facebook to see it and they can go and do it themselves, they're going to see it, right? That they have X number of employees. If that's all it's going to take, that's all it's going to take. I want to bet on founders that have the confidence that they can build a world class organization, right? That have that skill set, have that knowledge, have that depth, that they're not worried about Zuckerberg coming and copying what they're doing because they plan on being the next Zuckerberg, right? Um, and so go out and try to get feedback. Don't try to keep your things private. Don't go and spend a lot of time trying to protect things. Go and try to spend as much time as possible talking to people who will be your customer, and make sure that it is something that people are going to want. Once you figure that out, right? Like it's easier to get funding. It's easier to build. It's easier to know. So don't just take yourself and your friends as the people. Go out and talk to as many people as possible. Try to get as much feedback as possible.
Yeah, I like that thought process because I think to your point. I mean, you'll probably find something that you maybe missed or hadn't thought about, or maybe a better application to deploy that technology in a certain industry maybe you hadn't thought about, right? So to your point, getting that uh, litmus test, if you will, of the market, and to make sure it really is viable and it makes sense, and I think that's very valuable.
Yeah.
Yeah,
Yeah. Getting out of
very
stealth
cool.
mode. Seen a lot,
Yeah.
a lot of that lately. Awesome. Well,
Yeah,
Ali,
for sure.
this has been a lot of fun, man. Really appreciate you taking the time. Where could people go to connect with you and learn more about First Check Ventures?
Yeah, LinkedIn is probably the easiest. It's Ali Jamal, First Check Ventures, and the guy looks a lot like me in the profile picture. So, feel free to reach out, and you know, that I think that's the easiest. There's also an intake form on the website firstcheckventures.com. If you want to submit your deck there, you can also do that. Whatever's easier.
Yeah, that's great. We'll make sure to include all that in the show notes. Thanks so much, Ali.